People begin to become successful the minute they decide to be. Harvey MacKay. My friends, each and every day decide to be successful, and that is spend 10 to 15 minutes in the market, following the trends, learning by doing, and having a great time. I love this. I do it every day and have for over 10 years now, just bringing this one show to you in addition to my trading. And I love it. I love it so much. I look forward to it. This is not something I dread every day. I love analyzing the market. I love trading, whether it's practice trading, real money trading, learning a new scheme, learning something else to do. It is never, ever boring. And that's why I just say dedicate yourself to it. Once you decide to become successful, that's when the success starts. Let's jump into these charts. We see everything up for the day. This is one of those days where everything's going up. The S&P up 0.60%. Now, as we look at things, we can see volume. Again, maybe it'll reach average if we have two strong additional days. Look at the 2-day. This is the, again, Tuesday, Wednesday 2-day that didn't hit average. You can see it was an okay day for volume today, where things went up a little bit, 0.60%. But the high last week was 626.28. This week, 624.72. So we've not hit that prior high. We are still bullish, not super strongly bullish, but we are still bullish. Of course, your trade execution summary grid shows you the entry, exit, expected move, backtest accuracy, and directional probability. We release the one for the day before at the end of every day. So yesterday's we released just now at the Patreon page if you'd like to see it. And of course, if you become a Patreon member, you get an email. I've already sent the email out sending today's trade execution summary grid for Wednesday, the 9th of July, for your planned practice trading on Thursday, the 10th of July. And of course, you also receive the 5-day plus ETF trading analysis and execution plan. You can see what those look like each and every day. They literally have in them the analysis and predictions for the S&P, NASDAQ 100, 20-year bonds, gold, and Bitcoin, plus the trade execution instructions for your practice trading. So if you're really serious, sign up, be a Patreon supporter, and we will continue to bring you this show each and every day. So that is where we are on the S&P. We're still bullish, still hoping this market's got some legs on it. We're still in and have been in for many, many, many weeks, and it has been good to us. But remember, my friends, just like we saw starting February 24th, this market will go down. And typically, things that go up really high come down really low, and we'll be ready. And remember, when we rode this market down before, and it was good to us. You say, how, Tom, do you ride a market down? Well, one of two ways. You either take your profit, get out, watch it crash, or you jump into an inverse fund like SH and ride it down. And for those of you who've not practiced traded something like that before, when the market rolls over, it's going to give you an excellent opportunity to do just that. Let's move on to the NASDAQ 100. It was up a little bit more than the S&P, 0.71%. And as far as the high last week, 557.20. This week, 557.63. So we've hit a little higher. We can see on the 2-day chart, again, below average volume for the last 4 days. Look like we had average volume today with that up move. So we've managed to move a little higher. Candle smaller than last week. We may get up to average volume. We've got 2 days left. So again, NASDAQ doing okay. We are bullish on the NASDAQ still. Not that I'd be pulling the trigger necessarily jump in at the directional probability we're currently at in the backtest accuracy, but it looks like we have room for some decent move still until we start hitting some real resistance. We see that the resistance, the exit point on our S&P trade is predicated upon things like the 2-day resistance and historic highs. And as we look at the NASDAQ 100, our resistance is around that 1-week resistance mark. So we'll continue again, to stay long on these stocks as long as they will allow us to do so. Now, let's move on to 20-year U.S. government bonds. I was telling you yesterday that we were sideways on that, just the directional probability, sort of flipping back and forth, just a little either bearish or just a little bullish. Today, we are more bearish than we were yesterday. So again, we'll continue to watch. I'm still having a hard time sorting things out. I have told you that when I see a big break like this with things moving over, I'm waiting for the week to end. We're getting closer and closer. 2 more days. We may very well hit average volume. And if we do, and we're still in the red, that is one of my telltale signs to be jumping out. Now, this up move for the day at over 1% could put an end to that if things keep going up. But I'm waiting to see if things might just bounce off that weekly trend line on the half-day chart. Don't foresee this 2-day chart turning around strongly. And again, unless it's 2 strong up days, that weekly is going to stay below. So I am looking to be bearish, not bearish yet, but looking to be bearish, hoping that we'll get a directional probability up around 75–80%. That would make me feel really good about executing an inverse play. And you might say, Tom, what's an inverse fund when it comes to 20-year U.S. government bonds? Well, my friends, I've traded this one many times. Tango Bravo Foxtrot. That is the short. And of course, it's been going up this week and these last 4 days as U.S. government bonds have been going down. It's the ProShares 20-year short U.S. Treasury. You look at the liquidity there, it's just a few cents. 4 cents means it's liquid, means it's easy to get in and out of. I always look at liquidity when I'm looking to buy anything. It's like the difference between buying a house and using a U.S. dollar. You know, when you buy and sell a house, not all that liquid. The best is probably a car. You go out and you buy a brand new car and then you drive it around for a day and you want to take it back to the dealership. They're not going to give you anywhere near what you paid for it. That's called illiquid. A house is more illiquid because it's just a longer process of selling. And again, that's another kind of illiquidity, both inability to quickly trade it and also when you have the illiquidity of something like a car, you have a great deal of loss in there. That's one reason when we're looking at shorting gold, we don't use something like DGZ. DGZ. That is the short gold fund. And of course, the problem that you have there is you have a 40 cent on a $6.84. Look at that. If you wanted to buy, you would have to pay $7.20. And then to sell it immediately, if nothing happens, you lose 40 cents on something you paid $7.20 for. That's insane. That's why we don't use it. That's why when we trade gold or we go short on gold, we either we use options. We don't look to an inverse fund. But 20-year U.S. government bonds, you can. So we will be looking as the week comes to an end to see what happens. Do we have continued up movement? Do things roll back over for Thursday and Friday and make our decision easy? We shall see, and we shall be tracking it for you. Let's move on to gold. What is up with gold? The precious metal is up 0.45%. Now, gold, again, we can see where it topped. Again, didn't have any volume to help you out on that call. And then it's been rolling over these last few weeks. Again, never reaching average volume, sort of meandering sideways for the most part. We are sideways when it comes to our directional probability. Our backtest accuracy is not accurate, nor is our directional probability because it's so close to 50%. Again, not excited about gold at this point, waiting for something to happen to give us some idea as to which way it's going to go. We don't gamble. We don't flip coins. What's up with Bitcoin? We are bullish on Bitcoin. The bullishness is, hanging around about the same percentage area, not super high, not too low. And of course, Bitcoin does continue to just sort of chug along. Nicely up for the day, 2.83%. You can see that happened at the end of the day. Look at all that volume. And of course, as far as volume for the week goes, maybe we'll hit the average. We are at the average for the last many days, many days on the 2-day chart. And of course, we have 5 stair steps moving up over the last 10 market days, or I'm sorry, 9, because it's just the first day of the latest 2-day candle, which is a decent candle moving up above the weekly trend line on the 2-day and the half day. That's where we are, my friends. We always love to hear from you. Again, Patreon members, thank you so much for your support. If you're interested in being a Patreon member, then sign up. The first thing you'll get is my latest book, 3-Wave Trading Advantage, along with our Options Made Simple, the Charting Wealth Way. And again, great options training 3-part series comes for free along with the book at any of the 3 levels of Patreon support. God bless, my friends. All the best from the whole team at Charting Wealth.